So you're thinking about investing in Dubai real estate. Smart move, but let's get one thing straight. Dubai isn't just a hype market, it is a well-oiled machine. These are the steps you need to follow in order to enter the UAE's market and generate long-term wealth, cash flow flexibility, and even permanent residency. I'm Michael, and in this video, I'm giving you the full 2025 Dubai off-plan real estate investment guide. Whether you're an end user, an investor, or someone just looking for freehold, high return on investment, tax-free investment in the UAE, this is the playbook. Let's break it down step by step. Part 1. Foundations. Is now a good time to invest? This is not a video on the history of the Dubai market, but I do need to touch on it to paint a clearer picture on whether it is a good time to invest in the UAE. Dubai opened up the market for freehold purchase in the year 2002. Since then, prices have continued to rise before taking 2 downturns over its lifetime. In 2009, it was triggered by the Lehman Brothers bankruptcy, also known as the subprime mortgage meltdown of 2008-2009. At the time, there was loose regulation in the UAE. The market relied heavily on international credit, which dropped off a cliff overnight, leaving the remainder of many payment plans unpaid. Consequently, the market declined. Second, in 2014, it was a perfect storm. The price of crude oil began to collapse. This reduced regional buying power in the GCC. A very strong US dollar at the time made property in the UAE even more expensive for Indians, Europeans, and Russian buyers. And a surge in demand before these triggers led to an oversupply as the demand softened, and the UAE had just introduced a mortgage cap and raised the transaction fee from 2% to 4% to cool speculative purchasing. All of this led to a market decline. And just when things were starting to turn around, the COVID pandemic hit. During each of these downturns, Dubai has displayed its ability to analyze why they happened, introduce measures to prevent the same thing reoccurring, and bounce back even stronger. After the 2009 crash, the Real Estate Regulatory Authority was introduced, along with government escrow accounts to safeguard investors' money when purchasing off-plan. After the pandemic, Dubai displayed an absolute masterclass in crisis management, which kickstarted an economic boom, and consequently Dubai was the first international hub to open for business, long before any Western countries. This led to an influx of tourists, investors, business owners, and remote workers, and bolstered the real estate market. If the world didn't know about Dubai's lightning-quick learning curve, culture of safety and respect, tax-free benefits, beautiful climate, and welcoming nature, they would now know. That's a very brief history of the market, but why is now a good time to invest? The UAE was ranked the most stable economy in the world by the US News and World Report this year. Confidence is growing in the market, with brands like Wynn currently building the Gulf's first casino in the UAE. Demand for residential land and commercial real estate is surging. Wealthy expats, working-class Western families, and businesses are pouring in. Meanwhile, compared to Tokyo, London, Toronto, or any European city, Dubai is still massively underpriced. When the ruler of Dubai, Sheikh Maktoum, laid out his plans to make Dubai the best city in the world, he delivered. In just a couple of decades, with the odds and international opinion against him, he achieved one of the most remarkable feats in modern history. Now imagine this. In 2021, he launched the UAE's 7th major urban development plan, the Dubai 2040 Master Plan, which will upgrade Dubai's older urban areas, double Dubai's green and recreational spaces. Nature reserves are to cover 60% of Dubai, increase areas for healthcare and education by 25%, increase public beach length by 400%, and increase Dubai's population from 3.3 million to 7.8 million. So you tell me, is it a good time to invest? Now, what do you actually get when you buy in the UAE? You get freehold ownership, no catch, no hidden terms, perpetual ownership forever. You get a residency visa, 2-year standard investing visa, or a golden visa with a purchase of over 2 million dirham. You get tax-free income, a 6 to 10% rental return, stable growth year on year, and high liquidity, no headaches or hidden fees. The process to purchase, rent, or resell your asset is simple, fast, and headache-free. The first thing you need to do is clarify your goal. Are you looking at a long-term strategy, conservative, cash flow, long-term appreciation, and you're hedging against inflation and building a portfolio? An aggressive strategy, flipping on handover, growing capital with the least initial capital required. So how much do you need to invest? For 800,000 dirham upwards, this is entry level. You can secure a studio apartment in Dubai's most in-demand suburbs and or up-and-coming areas. It's ideal for long-term rental tenants and steady annual growth. 2 to 3 million dirham gets you a spacious 1-bed apartment in a prime tourist or business-focused location, perfect for Airbnb and long-term rental, with a higher appreciation factor than the suburbs. For 10 million dirham upwards, you're getting into the luxury segment. Above 10 million, you can start to look at townhouses, villas, and luxury branded residences in some of Dubai's most lucrative expensive and well-positioned locales. With Airbnb and long-term rental on the table, you can generate quite a lot of cash flow whilst your asset grows up to 10% on average year on year, particularly in the seafront communities. The UAE has something for every type of buyer, from studio apartments to mansions and penthouses worth hundreds of millions. There are plenty of opportunities in Dubai, Abu Dhabi, and now Ras Al Khaimah, where the new Wynn Casino and Resort is under construction. Let's run through the costs and also the process of purchasing using a hypothetical example. The first cost is the purchase price, broken into the booking amount, the down payment, and the balance paid via the payment plan. You have the 4% DLD, or Dubai Land Department fee, payable to the government body who register ownership under your name. Next, you have the admin fee, which is typically 5,000 dirham, and this is payable to the developer to process the SPA, or the sales purchase agreement, when you buy the property. Next, you have the Okud fee, typically covered in the admin fee, another fee paid to the government body to issue your ownership document. Let's look at an example of the purchase process. So step 1, you have worked closely with a broker here in Dubai and identified a project and developer that makes sense and ticks all of the boxes. Step 2, the broker has mediated with the developer and secured the unit you want in the form of a sales offer. This is a document stating the unit number, the price, the internal area size, the external area size, the floor plan, the payment plan, and all other relevant info pertaining to the unit. Step 3, you will then send the booking fee amount to the developer. This is typically 40 to 50,000 dirhams, or 1% of the purchase amount. It is paid via bank transfer or POS if you're in the developer's office itself here in Dubai. The fourth step, you will sign the booking form. The unit is now reserved and you have 2 weeks to pay the 20% down payment to the escrow, plus the 4% Dubai Land Department fee to a separate account owned by the developer, and finally the admin fee and Okud fee, also payable to the developer's separate account. Step 5, once you have paid the down payment and the DLD fee, the developer will draft and send you the sales purchase agreement, which you will review, sign, and return. Then we have step 6. The developer will then submit the SPA to the DLD and issue you your payment plan schedule for the remainder of the balance. Once the DLD processes the SPA, you will be issued with your Okud. This is a government-issued ownership document, essentially the title deed, but for a property that is under construction. Once the property is complete and handed over to you, you will be issued with your title deed, and the Okud will be rendered redundant. Last step, number 8, congratulations. You are now a property owner in Dubai. So those are the costs to purchase the property and the purchase process. Now let's have a look at the ongoing costs. As you already know, Dubai is a tax-free environment. The only cost applicable to a freehold property in Dubai is the annual service charge. The service charge is a fee payable to the developer for the ongoing upkeep, maintenance, and upgrading of the amenities, landscaping, and sometimes the AC bill also inside the building. The pricing depends on the area and the caliber of the development. Service charges in the Burj Khalifa will cost more than service charges in the marina area. However, on average, you can expect to pay between 3 to 5 dirham per square foot of your internal size for a villa or a townhouse, and between 15 to 18 dirham per square foot for the internal size of your apartment. Let's have a look at the return on investment expectation. Dubai's market is dynamic, and the return on investment varies quite a lot depending not only on the location, but also on the caliber of the project. The average rental yield for an apartment in Dubai as of August 2025 is 7.48%. The average rental yield for a villa or townhouse in Dubai as of August 2025 is 5.25%. These figures pertain to new contracts in the long-term rental market, meaning properties that have either just been handed over and are renting for the first time, or else properties that have recently been vacated and are renting on this year's updated rental rate. The figures are also gross, so service charges are not accounted for, which will slightly reduce the yield once you deduct those. So that's the long-term rental market. However, long-term rent is not the only avenue available to you. Dubai is currently ranked 10th globally as an Airbnb market. Areas like JLT, Marina, JBR, Downtown, Business Bay, and more do exceptionally well on the short-term rental market. Whilst you'll have to fully furnish your apartment to a high standard initially and manage it correctly on portals like Airbnb and Booking.com and maintain an 80% plus occupancy rate, you can achieve an 8 to 10% return on investment on your apartment whilst also keeping it essentially vacant should you wish to liquidate it. Even villas in certain communities and locales can perform exceptionally well on the short-term market. I've personally sold over 45 apartments that are currently on the Airbnb market in Dubai by their owners. If you would like to see a video regarding which areas to buy in, how to set up, furnish, license, and maintain a high occupancy Airbnb in Dubai, then leave a comment below and perhaps I'll get around to making that video for you. Now let's have a look at the market and the strategy strategy. Dubai has an area of roughly 4,000 square kilometers. Around 25% of that is urbanized, meaning there is around 1,000 square meters of developed land in which to purchase a property. Where to buy depends on your goal, your investment timeline, and the amount of liquid available to you. I will break down the market into 3 segments, highlighting some of the current best areas in that segment as per Dubai Land Department data. For high rental yields, areas like Jumeirah Village Circle, Jumeirah Lake Towers, Silicon Oasis, and International City. Growth areas, Dubai Islands, Dubai South, Marsa Al Arab, and Palm Jebel Ali. And for luxury, Palm Jumeirah, Jumeirah Bay Island, Downtown, Emirates Hills. There are of course many other areas in each of these segments, both here in Dubai and in other Emirates, such as Abu Dhabi and Ras Al Khaimah. These are just some of the better known and most popular areas. So which developer should you go with? Dubai has roughly 300 to 400 active developers launching and constructing projects. Within this pool are a number of government-backed and private developers. The government-backed developers tend to launch master communities and mega projects, and the private sector tends to develop more boutique and high-end luxury projects. There is no definitive answer on which is better, as it depends on what you are looking for from your investment. Government-backed developers are often seen as the safest bet, with long-term guaranteed growth, while some private developers are world-class and have seen the highest appreciation in Dubai whilst offering much more flexible payment plans. Some examples of government-backed developers will be Emaar, Nakheel, Meraz, Dubai Properties, Wasl, and Expo City. Some of the prominent private developers are Bengati, Damac, Shova, Omniat, Ellington, and Select Group. Bear in mind, these are just the big players, and I have worked with and sold units for many smaller private developers that have delivered impeccable quality on time and been amazing to deal with throughout. Oftentimes, newer players to the development industry are a prime option as they are offering a much better price. They are typically easier to secure a discount or a DLD exemption from also, as opposed to government-backed developers. A professional broker will have done due diligence on them to ensure they are up to standard before offering you their project. Questions like which contractor are they using to construct their project, what architect designed the development for them, and what is their reputation outside of the UAE if this is their first project in Dubai, are all factors which help identify a prime opportunity versus a slightly risky one. So let's recap. So now we have discussed a brief history of the market, whether it's a good time to invest, the benefits of investing in the UAE, the price points needed for each segment of the market, costs and purchase process involved in buying an off-plan property, the ongoing cost of ownership, the current average rental returns and options available to you, some of the best and most well-known areas to invest, different types of developers, and some of the most prominent names in the market. Let's touch on exit strategies and processes, and then fire through a Q&A session, which will hopefully give you everything you need to know regarding off-plan investment in the UAE. Exit options. A lot of brokers in Dubai will push this dream of purchasing off-plan developments at launch price and then reselling them a year later at a substantial premium. Whilst there has been occurrences like this in the past with regard to super exclusive, low inventory, luxury projects that someone was lucky enough to get in on at launch, this is not a feasible strategy and does not work across the board. If you plan to resell a project for a profit, there are a number of factors that are essential to consider. Firstly, you need to purchase something that is currently in high demand and low supply, ensuring by the time of handover, demand still outpaces supply. A prime example is the townhouse and villa segment in Dubai. Demand is far exceeding supply and will continue to through 2030. Secondly, the highest resale price will occur very close to or on handover of the property, as it is now ready to move into. Families are prepared to pay a premium to secure the home they want, and investors alike will pay a premium as the rental rates will still make it a prime option for investment by the time of handover. In terms of the resale process, some notes to remember. You must have paid 30 to 40% of the total value to the developer in order to resell the property before completion. However, the prospective buyer can pay the balance to bring the property up to the 30-40% paid mark if worded so in the contract. Selling an off-plan property under construction counts as a normal real estate transaction. Your cost will be the price of the NOC or non-objection certificate from the developer, which is typically 1,000 to 2,000 AED, and a 2% fee to the broker, which is optional depending on your agreement with them. If they secured you a fantastic price, you may be happy to pay the broker a commission, but you are not obligated to. They will receive a 2% commission from the buyer regardless. I would advise you to never resell your property in Dubai if you can help it. Dubai has a very bright future, and regardless of market corrections and conditions that the global economy may face over the decades, Dubai and the UAE has proven over and over again its resilience in the face of uncertainty and continues to thrive, expand and innovate. With freehold ownership and a tax-free economy, the UAE is one of the #1 #1 places in the world to build your portfolio piece by piece and secure your legacy. Now let's get into some questions. What if the developer fails or delays the project? In Dubai, we have government escrow accounts to protect the buyers. The government is holding your money in an escrow account and they will only give it to the developer when the project is complete. But bear in mind, there is a 12-month allowable delay by the developer, so always keep that in mind. Can you negotiate with developers? Yes, through bulk purchases, larger down payments or flexible timelines, and private developers are typically more flexible. Do you need to be in Dubai to buy off plan? No, the process can be remote, and actually 60% of buyers in Dubai every month on average are foreign investors, and of those 60%, 50% of those never enter the country. What is the selling process? First, you will list it with an agent or a broker. They will find a qualified buyer. You will get an offer. They will give a 10% deposit. They will sign the MOU. You will sign the MOU. You will get an NOC, and you will go to the trustee office and transfer the property. You will get paid, and the buyer will get the title deed. It's a very simple process. What are the costs when selling? So you have a 1,000 to 2,000 dirham NOC fee and an optional 2% broker's fee, which again you can pay to the broker if you're happy with them. Can multiple owners be on the title deed? Typically up to 2 owners are allowable on one unit. However, 3 to 4 owners can be on a unit when it comes to family members and units that are inherited from parents. How can I know if a real estate broker is trustworthy to work with? You need to use your gut. Do they seem genuine and have your best interests at heart? Ask for data from the DLD and reputable sources to validate all of their claims. Back up everything they say with reputable sources. Also, you can check their sales and experience on the Dubai Land Department website under registered real estate brokers. Here, if you type in their name, you'll be able to see how long they're in the industry and how many sales they have underneath their license for every year that they've been in the industry. So those are ways that you can check if they are who they say they are, and you'll be able to work out if they have your best interest at heart. Can I go straight to the developer and purchase directly without using a broker? Yes, you can, but it's smarter to use a broker for a few different reasons. The developer rep will always sell you their company's stock and claim it's the best. They work for that company and they're trying to do their job. And the fact is, you're not going to get any special discount versus using a broker. Lastly, once they hand over the unit, the only contact you will get from the developer is new offers on their latest launches. A broker will help you deal with them if you have any issues with the developer going forward. Regard to reselling the property, renting it, putting it on short-term rent, and day-to-day management, the broker's going to be there for the lifetime of the investment. Can I get a mortgage to pay for an off-plan investment? No. Whilst it can be done with some government developers under very finite circumstances, for instance, if 50% of the project is complete and you've paid 50% and it's with a certain number of developers, it can be done. But for the most part, you cannot get a mortgage to pay for an off-plan investment. The banks don't have any collateral to loan you against. This is why developers are offering very affordable structured payment plans. When do I get my golden visa after I make a purchase? So once you pay the 20% down payment and the 4% DLD fee, the Land Department issues you the Okud. You will use this document to apply for your visa. You do not have to have paid the investment off in full, just the 20% down payment to secure your visa. So again, once you pay that 20% and the 4% DLD, you'll get your Okud and you'll use that to go and get your visa, and you'll be issued with your visa with no questions asked. Can I put an off-plan investment under a company? Yes, you can, absolutely. The developer will require your trade license or your license of incorporation and some other relevant documents, but you can absolutely put it underneath your company. Can you help with securing an off-plan investment and structuring a company in Dubai? Yes, I can. My information will be in the description below. I'll be more than happy to work with you on securing an investment in the UAE. With regard to company formation and corporate structuring, I can connect you with the reputable professionals in that space that I have used many times before. Reach out via the details in the information section below this video. That is your full step-by-step guide to investing in off-plan real estate in Dubai and the UAE. Again, if you're serious about taking action and want help identifying high return on investment units, click the first link in the description and message me directly. I'll help you invest smarter in Dubai and set yourself up for long-term success.